Hey guys, this is the market update. The market is flipping right now from an inflation narrative to a recession narrative. Inflation's not going to be a problem over the next few months. We're seeing commodities, everything come off. So we're going to look at that. We're going to look at how that affects Bitcoin as well. Bitcoin trades like the NASDAQ, which is long duration, right? So small profits or no profits in comparison to your valuation. And so very receptive to changes in interest rates. Bitcoin is trading like that now, and so it's absolutely vital to know what's happening to interest rates and the rate of change of those interest rates and how that's going to affect Bitcoin. We're going into a different market right now. So over the last 6-9 months, when you've seen this huge move down, we've been in an environment where real interest rates have been rising significantly in terms of percentage terms, going from 0 up to 3.5% for the 10-year in the States. Okay, so a very hawkish tightening environment. That's not happening anymore. The market is showing us that they actually think the Fed should come back and real interest rates should come off because inflation is coming down because there's a recession. So this is right in the middle of that flip. This is why it's important. Bitcoin has been trading just like the NASDAQ, which is very, sensitive to rises and falls in interest rates. Rises in interest rates make borrowing more expensive, and that long duration cash, those income streams get, taken down a lot. And, Bitcoin has come off. Now, Bitcoin has come off because of that. And then you've had, factors like Celsius, Voyager just blew up today. So they've gone bankrupt, filed for bankruptcy today. Didn't move the market. So what I want to know is how much of this is priced in, and are we flipping into an easier rate environment that would actually be fairly much, I wouldn't say bullish, but definitely not as bearish as previous times. So come off the price, but then we've had these specific blow-ups, which is Terra Luna, Celsius, because of that 3AC, and these other ones forcing the price lower, as you can see. Is there anything left? One thing that may be left is Celsius Network officially filing for bankruptcy, which they haven't done yet. On that note, this is their wrapped Bitcoin vault. This was hundreds of millions outstanding. This was the thing that I think was in the 20s in terms of a liquidation price. They've sold down the debt, paid off the debt again and again and again. And now the liquidation price after today's payoff is 2,700. So for all intents and purposes, they're not getting liquidated unless something outrageous happens. They do still have $41 million, you can see down here, $41 million of debt. Compared to what that was, this is nothing. You can see the history right here. They've been paying off. You can see it right here, July 5th, July 4th, July 3rd, paying off debt over and over again. 50 million, 64 million paid off. So they are paying off this debt from, obviously parts of their business that maybe borrowers have been paying back or whatever. So they've been paying down this debt. This eases the Bitcoin market. And so is there going to be another announcement of some bankruptcy that could potentially sell us off again? Absolutely, it could. We're in a bear market. And so these bits of news are not positive. Let's be fair. However, how much of this is priced in already? Obviously, we don't know. But you can see we are trying to consolidate here around this 20,000 level, which is obviously just a humans trading level and a round number. We have to look about what's happening in the next 6 months with rates, because this is going to affect the price of Bitcoin. If you are a trader, I'll leave the link to Bybit in the description. They give deposit bonuses if you sign up. So if you deposit onto their platform, they'll give you up to $4,000 as a deposit bonus in your trading account. Only in your futures account though. So if you trade, you put some crypto or fiat on there, they'll give you that deposit bonus up to $4,000. What I want to look at though is rates. Is Bitcoin going to trade along with rates, or is it going to trade along with the NASDAQ, which is also selling off because that NASDAQ index has a lot of companies in there that are just going to earn way less money and start bringing down their profits expectations? Bitcoin isn't a company, and so it shouldn't trade along with those, but it is because of correlations with trading and everything like that. The important thing for Bitcoin is if it's trading along with rates, you can see that after a period for the end of last year when the Fed flipped and got hawkish, the rate environment has been outrageous. This rise in interest rates, has completely killed the stock market and risk assets. But you can just see it looks like we've topped. The reason why is because of other commodity prices coming down. We're in a recession right now. It's an official technical recession. It feels like a recession. But you can see that over the past few weeks, rates have come down, almost 15%. So that is a hugely volatile move for bonds. Like, this is insane what's going on right now. You can't trade these markets. They're so volatile. So a 15% move in the US 30-year, and we're actually getting down to the US 30-year at 3% right now. So this is really important for the economy and the easing or the tightening or the loosening of conditions for the economy. We'll look at the US 10-year as well, just to give us a better idea. It's the exact same picture, but actually even worse. Now, the US 10-year is shorter dated, meaning it's going to reflect the recession and the fall in rates from that recession that the Fed's going to have to do even more. So you can see that really, really clearly here. The US 10-year down 22% in a month from that top. This is hugely volatile, and obviously we're seeing now the past 6 months we've seen Bitcoin come down from those highs. You've had one of the most hawkish environments ever, going from basically zero interest rates over 6 months, going up to 3%. Now you might think, well, 3% isn't a lot, but if you just do the relative change, right? So the relative change in rates has been 200%. This is unreal. So that is what has fallen, made markets fall off. But now we're coming down again because of all of these real figures that are showing a huge deflationary environment because of the recession. Just to prove that, I have some commodity prices, and this tells you that the recession is here, right? So we have copper fallen off a cliff. This move down here, back to pre-invasion highs. So we are not in an inflationary environment in copper. Let's go over to wheat futures. Again, from the highs, just absolutely falling off a cliff. Okay, there is no inflation in these prices. This, over the next few months, is going to feed into prices and inflation is not going to be an issue anymore. Corn, corn just the same, right? So inflation of food, and we've got here the euro, which is just an absolute basket case. Now, the problem here for the world is that commodities are traded in dollars. The dollar is super strong right now. And so Europe is going to be facing huge inflation, which is going to make the recession much worse. And other countries that, have to exchange for dollars and then buy those commodities. Is that positive for Bitcoin or not? The Dow, the S&P, and the NASDAQ all pointing higher this morning. Why is that? Maybe they just are looking around and saying, we've actually been in a recession, it's been here. And then potentially looking forward, we're looking at an easing of policy. As crazy as it sounds, because we've been talking about tightening of policy for 6-7 months, it worked. But it's not just interest rates that tighten the economy and demand and crush demand, it's oil prices. Oil crushes demand in the rest of the economy because everything's so expensive, people just give up and they're fed up paying for anything. And so that recession comes. Now what happens? Central banks have to step in now and start actually easing, or at least trying to lower rates and being a little bit more loose in their policy. Now, if they do that, you can see that actually, even though recession is here, that the stock market possibly can at least find a bottom or even just get a relief here. Why? Well, one of them is short covering. People that went short when the Fed flipped are now thinking, you know what? Things are changing, things are flipping, and I might want to get out of the market here. So they might just be covering their shorts. Great trade that was. We're going into a new regime right now. Absolutely. Are people going long the market here? I don't think so, because there's still a lot of downgrades for income and earnings from these stocks to come out. And so it's going to be a real tough picture for stocks. But when looking at Bitcoin, what you're really looking at is, what are rate expectations? And what we're seeing here is, yes, rates are coming up, but you can see they start coming off again 2023 towards the end of this year. We're only, 6 months away from that. And so when traders are looking out, they're thinking that is relatively more hawkish, a relatively more dovish and easier environment, because this recession has to be dealt with then. So yeah, really interesting environment right here for BTC. And what you're seeing for BTC potentially is two things. Firstly is a local bottom to the absolute carnage that has occurred in the lending sector, right? And the second thing is, lower rates is good for BTC. And that's why, you know, lower rates plus the debasement of debt saw us move up in the first place. So really interesting for BTC, very difficult to trade. But I think, like I said in this video says, we are flipping right here. If you are a trader, I'll leave the link to Bybit in the description. They give a deposit bonus up to $4,000. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.